What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 2nd of 2018. Well, folks, it's time for a daily update here on the DataDash channel, and today we have a lot of interesting things to dive into. First and foremost, as always, we'll be taking a look at market valuations as well as doing some TA on the market leaders. But along with that as well, there's a lot of interesting headlines we have to dive through today in regards to traditional finance and its reaction, whether it be commercial banks, central banks, or investment funds in regards to cryptocurrency. So today we're going to be diving through not only some of the big headlines in the space, but also some of the under-the-scenes things that are going on in the banking space in reaction to cryptocurrencies. So we'll go ahead and dive into that today, guys. We got a lot of interesting things to talk about. Let's not push it off any longer and jump into the daily update. So first and foremost, in regards to trend in the market, guys, we're still signaling a sideways trend. We got to be patient here, guys. Right now, we've just gone through one of the biggest cycles that we've seen in crypto for a while in regards to the downside. And now that the closing of the cycle's been over, it takes time to accumulate the new capitals. We can see here the volume was trading quite heavily at around $62 billion back at the peak in January. And now we're not even at half of that. We're around $17 billion right now. It's just a quiet time in the market. Money's generally shuffling up and down in regards to the market. And because of that, you don't have any crazy buying. You don't have any crazy selling. It just means the prices are going to remain relatively stagnant. And we're waiting for that new pool of liquidity to come in, and that's when the institutions are going to get involved this year. So as of now, guys, again, still heavily betting on Bitcoin. Nothing's changed in regards to the portfolio except outside of my two additions to Cardano and to Icon as well yesterday. But I'm obviously adding those positions as we see other coins go down and provide nice discounts. So you can look for those opportunities in the market. But again, you've got to do your own research and find what players you really want to buy at these levels. Some are still overvalued, and we're waiting for some of that market dominance to flush out and then provide an opportunity back to the upside that we can get into. So next up, guys, in regards to Bitcoin, as we take a look here in regards to the price, I want to take it down to the hourly because we can obviously see we got a little bit of rejection at the 38% mark on the Fibonacci retracements. So as you can see here, rejection at the 30% mark. And now what we're doing is generally possibly holding near the 50-hour. We have to see if we can find support in any of these hourly moving averages. But I think so long as we hold above the 200-hour, I think we're good to go. I'm not really fearful on it. But again, if we break below there, I'll definitely talk about a strategy in regards to where Bitcoin might be going if we get below the 200-hour. But for now, I think we're holding steady here. I think we're still set to contest towards higher levels. There's just been some small headlines going on between here. I think there was some news in regards to ICOs and regulation, as well as some positive news, which we'll talk about later on in regards to investment funds. So again, guys, nothing too serious here. It's still generally sideways price action. We have to wait to see if we can really pick up a trend here. All right, so let's go ahead here, go back to the daily, and take a look here at Ethereum. If we go here on Bittrex, we can see obviously that Ethereum is still generally holding around the 8 million Satoshi mark, but it looks like we are set if we get a big volume candle to break down and roll over and double bottom in regards to Ethereum and break down towards lower levels towards 7 million Satoshis. Again, not trading this one yet, guys, are adding, just keeping an eye on there, waiting for contact generally with 7 million Satoshis and the 200-day moving average. Also, I apologize. You guys might hear some wind. It's very windy out today. All right, so let's go ahead here. Take a look here at Ripple. As we can see here, Ripple not only got rejected by the 100-day, but again is continuing that slow downward trend. Again, guys, I really want to emphasize, I'm going to pull it up here on Bittrex where we have a little bit more price action to play with. Again, repeating history. Not going to say it every single time, but again, it looks like I wouldn't even touch it until we go down to the 200-day. All right, so let's go ahead here, take a look at Bitcoin Cash. Bitcoin Cash still holding by a thread on that wedge. It's getting really iffy here. I'm waiting for that big red candle to go through to just cancel on the trade. But if we get a good green boost here, we might still have a trade. Just don't know what the catalyst would be to break out of such a large wedge that's been building up over these past few months since November. So really interesting stuff. We'll have to see. Litecoin, again, same old story. I'm not trading it here. I'm waiting to see if we can make contact with that 50-day or the 100-day or the 200-day. I still am betting on the more bearish case, guys. I think we're going down to the 200-day. Might be a long shot, but that's just personally me. ADA, BTC, Cardano. Though I've added to my position, guys, I'm slightly down on it in regards to my addition I made yesterday. I bought around 2,700 Satoshis, and now we're around 2,600. So we're going to see if we can still hold at this level. Again, my level that I'm looking for is 2,500. That's my kind of base support level for Cardano. And if it breaks through, I'm not panicking. I actually see it as a great opportunity because I want to add my second edition around 13 to 1400 Satoshi. So if it does go down there, I'm going to add on that place. But again, you guys get to decide for yourself and do your own research. Definitely not advice on that, just in case for those of you who are wondering. And then along with that, on the chart for NEO here, I'll go ahead and pull up on Bittrex to get some more price action. NEO collapsing again yesterday, as we talked about, down below the 50-day, and now is looking to charter down towards the 100 or 200-day. This could provide a really good opportunity if you guys can remain patient on it. I know that I will be definitely looking around 7 million to 8 million Satoshis, depending on where the 200-day is. If we can get it down there, I think that'd be a much better level to add rather than at 14 million. 50% discount if you can get it at 7 million Satoshis, or sorry, excuse me, 700,000 Satoshis. So that's generally the TA for the markets, guys. Nothing too crazy going on. Again, sideways market right now, so we just got to remain patient, look for good buying opportunities, and hold out for the next cycle. So now let's go ahead and dive into the traditional financial sector. This is where it gets a little bit interesting, guys. There's a lot of different components of traditional finance. And as we go through the different articles and resources we're going to dive into today, we'll see, interestingly enough, that even though I think we all stereotype and understand to a degree that banks and investment funds and central banks and governments, they all collude to a certain degree. They want to have control over things. I think that's obviously understandable. But at the same time, we're going to see that there's different fragmented approaches and different ideas going on and circulating in the financial sector in regards to dealing with this new emerging market of cryptocurrency. So we've got really interesting resources to go to today. First and foremost, we're going to talk about an article from the BBC where Carney, who is the Bank of England governor, the Central Bank of England, had an interesting little small speech, or at least this clip here of Carney speaking, had a both respective and also critical tone in regards to crypto markets and the crypto mania, as the headline speaks of. So I recommend you guys go ahead and watch it. It's 51 seconds. He basically talks in regards to the idea of seeing how this crypto ecosystem could be something of substantial value, and that it should be, regulated such as every other market in finance is. Now, I have to say, as much as the headline made it seem negative, he actually does have some positive talking points, but he also got critical outside of just the regulation talks. He also talked about how the fact that it fails as money because it's wildly volatile, poorly understood, and that it's not widely accepted. Now, these seem kind of like straw man arguments against crypto because, first off, crypto markets are very young. They're only about a $450 billion market, and because of that, compared to traditional currency markets, whereas if you value them in US dollars, it's $84 trillion for all fiat currency around the world. That's a very big difference. So we have to understand that while something is still a multi-hundred billion dollar market and not a double-digit trillion-dollar market, things are going to be more volatile. They're less stable and less established. And yes, like he says, not only poorly understood, but also not widely accepted. But being widely accepted, as well as a reduction in volatility, will come in time for cryptocurrencies. The one thing that I think is not a fair argument is being poorly understood. As much as we need more people understanding blockchain and understanding how these technologies work, it's not exactly key for everyone to understand how these cryptocurrencies work. If you think about it, most people don't understand the monetary system in the world. If you really think about criticizing the traditional financial institutions, most people don't understand how central banks work and how money works and how monetary policy is operated by central banks. So again, I think that's a kind of straw man argument, but these two as well will be fixed in time. However, I do like to see more people, both in central banks as well as the banking sector, kind of realizing that this market is going to be something. And like I've talked about on my speeches as well as here on the channel, I think banks are definitely not going to give up on the opportunity to invest and make money off this market. As well as that as well, we have Goldman Sachs coming out, one of the largest banks in the US, coming out and stating that in its current format, cryptocurrencies are in a bubble. Well, it's interesting because Goldman Sachs, that's where we never get a consistent message. First, we hear that it's a bubble. Now we hear that in its current format, it's in a bubble. And as we go through, we hear all types of different things. First off, this quotation, our view that while we like the concept of blockchain and think that it will evolve into a useful tool for companies, for the financial industry, we think cryptocurrencies in their current format, meaning that in current incarnation, are in a bubble. So he believes that right now in the current financial space that cryptocurrencies are in a bubble. But interestingly enough, let's go down to this other quotation here. Is there room for digital currency? Maybe sponsored by one of our maybe central banks like the Federal Reserve? Yes. Could it be incredibly useful? Could it reduce transaction costs? Yes, but not these ones. So he's talking about traditional currencies out there on the market right now. And this really goes towards where I want to spend some time to talk about the underlying operations of central banks around the world. Many people wonder, Nick, is there any kind of evidence of what we can see, what banks are really doing? Some people like myself really love kind of doing this kind of nitty-gritty research and kind of looking into the space of traditional finance. I always love to see what the bankers are doing because you can stay a step or two ahead of what actually happens if you can do in-depth research and just kind of pick up on some key trends. Well, we not only see the traditional sector of finance adopting crypto to a degree, as much as there have been some regulatory barriers in certain countries, as well as banks cutting off transactions to crypto. On the global scale, we see at the BIS, or the Bank of International Settlements, and for those of you who don't know what the BIS is, it's the central bank of central banks. It is at the peak of what you can almost put as a pyramid in regards to the scheme of finance. And the Bank of International Settlements has come out pretty confidently with something known as the money flower. It's a diagram that talks about all the different types of money. And as we go through and take a look at it, we actually have two different ones here. One that will show the direct terms, and then also, in this case, examples of these different types of currencies. So if you take a look through here, we can see that Bitcoin is on the money flower. And the money flower is almost like a Venn diagram in the sense that you have these different layers of features. So for example, if a currency or type of money is electronic, or central bank issued, or peer-to-peer, or universally acceptable, and if something is outside of that, it probably meets a different standard. So for obviously cash, it's not electronic, and you see precious metal coins being universally acceptable, as well as peer-to-peer and not centrally bank issued. So all these different types of currencies, and there are examples listed here. But what's really interesting, folks, is what we see at the center of the chart. And this has been released for a while. This was a proposal made to the BIS. It's not their super secret plan as of yet, but this is a current proposal that was issued back, I think, in 2015. And we noticed that in the center of the money flower, that is universally acceptable, electronic, centrally bank issued, and peer-to-peer, FedCoin. Notice how we were just taking a look at the article in Goldman Sachs talking about a Federal Reserve issued cryptocurrency. For those of you who don't know, the Federal Reserve is the central bank of the US that issues monetary policy. And many people have been theorizing, not only with FedCoin, but also Catcoin, which is Canadian coin, that there would be different types of centrally banked issued cryptocurrencies over the next few years. And I have no doubt that this is going to be a proposal that not only was far ahead of its time in 2015, but will become a reality in the next year or two. If we have any sort of currency crisis, if we have instability in traditional markets, there's going to have to be an alternative for them. However, at the same time, these are not going to be cryptocurrencies, guys. These are centrally banked issued. And because of that, because of the fact, this is the chart I wanted to go to here, there is going to be a creation of central bank cryptocurrencies, or CBCCs. The problem is that these are not traditional cryptocurrencies. They are centrally controlled. This means that they will be able to fluctuate the amount and supply. They will be able to mutilate transactions, where immutability is one of the key cornerstones of Bitcoin and other cryptocurrencies. And you're also going to have all types of different monetary policy issued over them, not just in the sense of how much are in circulation, but interest rates, loans throughout these centrally banked cryptocurrencies. And what's really scary is, whereas in Bitcoin, so long as you can manage your money, you've got your money. In a central bank controlled cryptocurrency, it's just like when Andreas talks about and other people in the space. In these centralized systems, they're not decentralized. They could remove funds from your account. They can stop transactions. There's no censorship resistance with these currencies. So because of that, again, this is what their plan is going to be. They're going to say, oh, we have cryptocurrencies. But really, outside of the benefit of maybe lower transaction fees and quicker confirmation times, there's no added benefit from these currencies. So again, this is one of the proposals they have. But it's interesting to see, and it will be interesting to see over the next few years, how the economy turns out, and then also how governments and banks, and central banks more specifically, respond to the rising market of cryptocurrencies. I think it's going to be a multi-trillion-dollar market over the next few years, and it will become a respected currency market once it becomes more mature. And speaking of maturity and traditional finance seeing more of potential in this market as it matures, there is a $1 trillion money manager in the market. Wellington is coming out and talking about investing in cryptocurrencies in their portfolios. So This goes into a wide span of things. Not only do they consider the idea of adding cryptocurrencies into their portfolios, whether it be through direct ownership if they have the opportunity to, or through buying Bitcoin ETFs as well as futures contracts, but along with that as well, they're talking about the idea of adding in chip makers. This is one of the first steps they can take, such as NVIDIA and AMD, into their portfolios in order to have a stake in the infrastructure of cryptocurrencies in the mining space. So really interesting stuff here to see that there's a lot of positivity coming from the traditional financial sector. And we can see that even after we had a little bit of a reduction here in the price of Bitcoin, we had a pretty positive run up afterwards from the news coming out. So recommend you guys go checking through these article resources. I'll leave it linked down below. But Wellington Management Company is a well-respected financial company. It's one of the largest private investment firms in the financial sector, managing over $1 trillion in assets. That is really positive news for cryptocurrencies, even if they do a small fragment of investment into this market. It shows a sense of solidified trust and interest from traditional finance, which again is going to be the big theme this year, guys. 2018 is going to be when regulation comes in to a degree, but I think you're going to see overwhelming support and participation from banks and traditional finance in this sector. And the reason why it plays as an interesting role is because banks are going to not only make this market more solidified in the sense of valuation, but it's going to really start to see, I think what we're going to start to see is that banks are going to push this to being a mainstream currency supply. It's going to provide the infrastructure, provide the foundation to where this can really take off. But you're also going to have central bank cryptocurrencies as well. And I would hope that we as a community, through innovation and through continuous marketing and speaking out on the core values of blockchain and cryptocurrencies, that we can encourage people to utilize decentralized currencies over central bank currencies. But this is going to be probably inevitable, guys. They can create whatever they want, and unless we really do our job to spread the good word about decentralized, trustless systems, central bank currencies will become something of the future. So I'd like to hear what you all think about this. What do you guys think central banks and other governments and commercial banks are going to do in response to cryptocurrencies? Do you think they're going to support these decentralized currencies, or do you think they're going to heavily regulate traditional currency market, cryptocurrency markets, and support more centralized currencies in regards to central banks? I'd like to hear what you guys think down below. But again, guys, there's a lot of interesting things going on in this space, and I'll try to keep up with it as much as I can. But until the next video, guys, thank you guys so much for watching, and I'll see you guys in the next video. Stay tuned.